Good morning and welcome to Coffee with Rich. Very excited about today's show today. Today, my guest is Rob Davies. He's a futures trader, if I could say that, up in Pennsylvania. And he is going to talk to us a little bit about some of the economic things that we may see in 2021. I invited Rob and his crystal ball to give us some best guesses, mathematical guesses, scientific wild ass guesses as to where we may or may not be going. And I'm very excited to have you join me today. But before I ask Rob to introduce himself, I need to get my house in order here. So I got the notification from Mr. Zuckerberg that I am live. So that's kind of cool.
Good morning.
Okay. Let's see. We are up. Thank you to the 8 folks that are joining us already. Wow, you guys are up and early. Hope you like the new time. We've adjusted coffee with Rich to 7:30 Central Standard Time, and I'm a couple minutes early. And thank you for jumping on with me. Hopefully, this makes it easier for some of the folks like that are already on this morning. Jared out in Montana and Gerald in Oregon. Good morning, folks. Glad to have you. Please hit that like and share, because I want to make sure that we get this out there to folks that need this information. Rob, good morning and welcome to Coffee with Rich, sir.
Good morning. It's my pleasure to join you.
Good. And Rob and I kind of met online. Rob had saw the show that I did earlier this year, probably March or April this year, as far as emerging threats. I did an emerging threats series. And if you haven't watched those, maybe go back and watch some of them. Some of them were pretty interesting, but one of them was on potential economic problems. I think emerging threats Monday, economic collapse. But Rob had sent me an email and we got to talking back and forth. And I was really impressed with what Rob had to say. And some of the things that he'd done. So Rob is a futures trader, as I mentioned a moment ago. Rob, can you give us a little bit deeper dive on your background?
Sure. I was born and raised in Philadelphia. I have a degree in international relations and a minor in economics. I spent about 8-9 years working in the econometric consulting field, where I worked for a company that provided consulting and data. I worked on the data side. And I took that expertise and went to work for a small private money management company where I still work today. Now I trade futures for them. We invest money for our clients and for the owners of the company, their own capital. And, that's about it.
What being a futures trader, Rob, that sounds pretty sexy. Can you break down what exactly is a futures trader?
Well, I trade futures. Pretty basic. A futures contract is an agreement that 2 people make, and these originated with agricultural goods. So a farmer can look at the price for wheat and say, okay, I'm going to have so much wheat when it comes to harvest time. And he can sell it today, right? Essentially make a contract to sell it today at a point in time in the future, after the harvest. Mm-hmm. But they set the price today, the price and the quantity and the delivery date today. And now you can have futures on almost anything. I don't trade agricultural goods for the most part. Precious metals is another popular, and energy, oil, gasoline futures. And you can go long the commodity or short the commodity. Primarily what we do is equity index futures and some bond futures. So we're essentially making a bet on whether the stock market is going to go up or down, or interest rates are going to go up or down. We tend to be very short-term oriented. A day, maybe a few hours to a week at the most is how long we look into the future.
And think of the
short.
Okay, thank you, Rob. I appreciate that because I thought I knew what it was, but I didn't know that a future trader could actually be working in small blocks of time, like hours. That's pretty impressive.
Oh, yes, we frequently do that.
Okay, thank you to the 20 folks that are joining us. Please like and share. Hit that share button. I'm going to give you a quick second to take a share break. As you can tell, we got a lot to cover today. And why are we covering this? Because a lot of people think that they are disassociated with the economy. Somehow the economy is some brick and mortar building, and there's something going on somewhere, maybe around Wall Street, that has to do with the economy. But remember, folks, the economy is me and you and our relationship to our precious resources, like those wheat commodities that that are out there. And if you think that your life is not touched by the economy, my friends, let me assure you that it is. And let me welcome some of the folks that are joining us this morning, Rob, and then we'll jump into today's show. Ray, good morning, sir. If you're a coined member of the American Warrior Society, please let me know who you are, what your coin number is, and where you're coming from this morning. I'd love to know that. And once again, please hit that share button. If you don't know what the American Warrior Society is, well, my name is Rich Brown. I am the co-host and co-founder of the American Warrior Show and the American Warrior Society. American Warrior Show is America's #1 self-defense podcast, and we would love to have you listen to that as well. Jeff, good morning. Elaine, good morning. John says, early for you West Coaster types, easy here in Ohio. Thanks for coming on, John. Tiny, good morning from Brunswick, Georgia, day 264 of 15 days to flatten the curve. I feel you, brother. Razmik is on this morning. Karen is on. Good morning, Karen, out there in the hills of East Tennessee. My Aunt Karen, maybe my uncle is joining us this morning. Let's see who else we got. Pat Hill is on. Alan Kelly. Robert Gayhart is on. John, Will, Dan. Wow, we got a lot of folks. Gerald says, how does the average individual invest in futures and still keep a full-time job? I think let's come back to that because that may be a great question for Rob to talk about. Thank you, folks, and let's get going. Let's start off, Rob, if we could. Did I give an accurate description of what the economy is, or is there a more succinct or more appropriate answer?
I'm sure if you open up an economics textbook, they have a very particular definition, but I think what you said is generally true. It's the economic activity that we all engage in. We buy, we sell, we work, we get sick, we die, we buy things. All of that is the economy. Every time there's a transaction, you're part of the economy.
Yeah. And one of the things that exists in the economy is something called inflation. Can you talk to that a little bit?
Sure. Before I get too far into things, let me just say that all the opinions and beliefs I express are my own. They do not necessarily reflect those of my employer, and they do not constitute financial advice. I'm not a registered investment advisor, and I'm not here to solicit any investments from anybody for my employer. But inflation is a general sustained increase in the price level. Basically, it means things are getting more expensive. It's not just, say, the cost of gasoline. Gasoline goes up, it can go down. But it's when it starts pervading the entire economy. It's gasoline, it's food, it's your utility bills, your insurance costs, your medical costs. All those things combined start going up, and they start going up rather quickly if things get out of control. And I think it's one of the most pervasive and dangerous things that can happen in an economy is to go from inflation to rapid inflation to hyperinflation, which is a frightening prospect.
Yeah, it is a frightening prospect. And there's a lot, I'm sure there's a lot of root causes to what creates and drives inflation. But at the simplest level, isn't inflation just due to the fact that your money has less value, or am I oversimplifying that?
Well, I think that's sort of restating the problem. Money has less value, therefore things are more expensive. Mm-hmm. For instance, if you had a rich uncle who buried $100 in 1913 when they created the Federal Reserve System, today that $100 is only worth about $3 to $4. So that's what inflation does over time. When it starts, and our Fed's policy is to create inflation. They have a target of about 2% inflation. So they would look at the most recent numbers where we're running a little under 2%, saying, oh, we need to stimulate more because we have more room to stimulate the economy. And they've been encouraging the federal government to spend more, to engage in more deficit spending, to stimulate the economy as well, because the Fed is almost, well, they're almost at the limit of what you would have expected cutting interest rates to be. They're essentially at zero right now.
Right.
In some of the more progressive countries in Europe, they've actually gone to negative interest rates. So you put your money in the bank, you put $100 there, and a few months you get $99 out. That's, why would anybody use a bank? I don't know at that point.
Yeah.
But
yeah, and again, well, we talked about before, the Fed, if I remember correctly, has two ways it can manage monetary policy through, I believe it's a raising or lowering interest rates, and then quantitative easing, which is creating money, right?
Yeah, printing money. And they've been doing both pretty aggressively.
Yeah. And to go back to your analogy about the money buried, and I believe you said, was that 1930 or what? 1913. I believe at a 2 to 3% inflation rate every year, the price of goods will double every 20-ish years. Does that sound about right?
That's about right.
So we have
yeah.
And I believe they consider that, they being the Fed or whomever is pulling the levers, that is a healthy rate of inflation, correct?
Yes, they consider that to be stable prices. That's what their goal. They have two mandates: to keep unemployment low and to create a stable price environment. And they consider 2% a stable price environment.
Okay, good. If you're just joining us, somebody just shared this and you're like, who are these folks and what are they talking about? My name is Rich Brown. I am the co-host, co-founder of the American Warrior Show, American Warrior Society, and I'm joined by Rob Davies. And Rob is a futures trader up in Pennsylvania, and we're talking about the economy and some of the things that we can look forward to or prepare for in 2021. And let's see, Mark is on. Good morning from Ontario, Canada. Sam Day is on. Jeffrey Brown, my brother, is on. Thanks for being on, folks. So we talked a little bit about inflation. How do you hedge against inflation? How does the average American or maybe a corporation hedge against that rising or maybe hyperinflation?
Wow, that's a good question. There are a lot of different things you can do. If you're a corporation and say you're a wheat processor, you turn wheat into flour. One thing you could do is you could go into the market today and buy a futures contract so that for the next year, you know what you're paying for your wheat so that you can process it into flour. That's one of the things that you use a futures contract for. That's what they were created for. A lot of people look to precious metals as a hedge against inflation, and they can be, but they're not necessarily always a good investment. If you buy gold during a period of time where inflation is high, say the late 70s, early 80s, the price of gold rapidly escalated because people were afraid. They were looking at 10% inflation and later 15% interest rates. And like, oh my goodness, let me buy some gold. So they would go out and they would buy gold. Well, they were paying $800-900 an ounce. And then all of a sudden, Paul Volcker takes over at the Fed. They kill inflation. Reagan is president. Morning in America. Everything is great again. Price of gold collapsed. So it's not a guarantee that in the future you're going to have more money if you put it in gold today. But in the long term, if you're concerned about inflation, having some of your assets in precious metals is not a bad idea. Mm-hmm. Somewhere between 3, 5, maybe up to 10% would not be a terrible thing to do.
3, 5, up to 10% of your overall portfolio. Is that what you're talking about? Okay. Yeah.
There are problems with buying gold. There are many ways to buy gold. Most people think of gold as I'm going to go buy some gold coins. American, Canadian, South African Krugerrands are very popular as well. In most major countries, coin precious metals, silver and gold. But during scary times, it can be very difficult to find. So you'll go to your favorite online gold retailer and they'll say, oh, well, this is out of stock and that's out of stock, and notify me when it is in stock. The other problem is you have very high transaction costs when you're buying physical precious metals. The price of gold may be $1,000 an ounce today. It's more like $1,800. But say it's 1,000. Well, you might be paying 1,050, 1,000 and, and 80, 90, $1,100 just to buy the gold. So you're already 10% behind the curve.
Yeah.
There are other ways to do it. If you have a lot of money, you can buy a gold contract. A standard gold contract is for 100 ounces of gold. That's an $1,800, an ounce. 100 ounces. That's $180,000. It's a lot of money to put up, for your average person. Now, you don't have to put all that up because you buy a futures contract for a much smaller amount of money, because you're not actually buying the gold. You're buying the right to buy the gold at a future date. Another popular method of doing that is through ETFs. There are a variety of ETFs that allow you to invest in various precious metals: platinum, palladium, gold, silver, and I'm sure there are others. And they vary how they work.
ETF, Rob, is what? What is ETF?
Traded fund. It trades like a stock, but it moves up or down based on the price. So essentially, somebody has put together a pool of money and they buy gold or silver or whatever the commodity happens to be that their ETF is for. And it can be more than one commodity. It can be precious metals generally. And you go into the stock market through your online broker, or, pick up the phone and call Merrill Lynch, I guess, if you really were old fashioned. And you can, invest $1,000 in a gold ETF if that's what you want to do. The downside is, if you're really concerned about, the economy, you might want to have the physical precious metal in your hands. And there are some that are, at least in theory, catered to that desire, where, you buy $1,000 worth of a gold ETF and you have the right to receive $1,000 worth of physical gold at the time of your choosing. And they usually have delivery in multiple places around the world.
Yeah, that's what are your thoughts on that? Because I know a lot of folks are like, if I don't have it in my hand, I don't own it, because it's somewhere in a vault in the Cayman Islands, and I have this piece of paper that says I own 1,000 ounces of gold. I mean, a lot of people are not comfortable with that. What are your thoughts, Rob?
If you don't have the ability to get the coin today and you still want to invest in gold, it's a good way to hedge, so that when you can get the gold, you'll have the resources to do so. At least, as long as the whole system hasn't gone to heck in a handbasket.
Yeah, well, let's hope not.
But if you're really concerned, I would say, if you go to the coin store and, you can't get the gold, or they're charging really high premiums on it, get your ETF today and watch for the coins to be available, or be available at a reasonable premium. And when you find it, buy the physical product and sell the paper product.
Yeah. And if you're watching this show this morning, go, Rich, this is a self-defense podcast. Why are we talking about economics and futures trading? Because folks, self-defense, safety, and security exists on a spectrum, I believe. And, if you survive an incident and you survive it physically, but you are wrecked financially, did you really survive anything? So we want to make sure that our viewers and listeners really get a full 360-degree approach to their family's safety and security. So before I go any further, Jeff Day says, good morning, coin number 1933. Brett Parker says, good morning, Rich and Rob, coin number 876. Good morning, Brett, out there in California. Jeff is on, says, hey. Matt says, good morning. AWS coin number 1987. Tiny says, Rob's beard is giving Jeff Brown's a run for its money. Yes, indeed it is. Alan says, I haven't messed with investments in my lifetime, but what are the safe investments, i.e. stocks, bonds, futures, etc.? Great question, I think.
Wow. It is a great question. There's really nothing safe, in terms of, if I put my money here today, will it be there tomorrow? I mean, a bank account is probably the closest that you get to that. In theory, it's guaranteed up to, I believe, $250,000 per named account holder. So, that's safe, but it returns nothing. And, if you start getting fees from your bank for, you don't have enough of a balance, you wrote too many checks, you made too many withdrawals, your ATM fees, you can actually lose money pretty quickly, with just a bank. In the long term, if you believe that the American economy is going to survive and the stock market has survived World War I, World War II, the Great Depression, the Great Recession, the Obama administration. It has survived all these things, and it's done very well. So in the long term, investing in a broad-based index like the S&P 500, the Russell 2000, the NDX 100, and these are just various baskets of stocks. The S&P 500 is 500 large American companies. Now, can one of them go bankrupt? Sure, they go bankrupt all the time. Can some of them do very poorly for a sustained period of time? Yes, they can. But the index overall gives you diversification. So if the question is, what can I safely invest in? Invest in America and invest in diversity. And you can take that a step further and invest globally on a diversified basis.
Now, one of the questions that just came in, Rob, is from Gerald. And Gerald says, what about the green stocks you hear a lot about across the spectrum?
By green, I assume he's talking about environmentally friendly companies. Mm-hmm. So battery companies, Tesla, wind, solar, wind energy. Yeah, I'm not really an expert on them. But I think given the political climate around the world and, what we're experiencing, here, with the likely incoming Biden administration, I think you're going to see government putting more money into those types of companies. So they're not necessarily a bad investment, even if they're not really great policy.
So a moment ago, we talked about using gold and silver as a potential hedge against inflation, as one of the ways you may want to hedge against that. Is buying gold and silver, in your professional opinion, a good idea?
I think having some of your money in gold and silver, I have some in coins myself. I think that's a good idea. If nothing else, if the ATMs go down, you can walk into a store with, 10 ounces of silver and buy your groceries.
Yeah.
Now, you might be able to buy your groceries. If things are bad for a long time, you would probably be able to buy your groceries that way. If you go into a store, tomorrow, go into Walmart, they're probably going to think you're nuts if you try to buy it with silver coins. But, the farmer down the road might be willing to trade you some eggs and some milk.
Yeah, we've talked about this on the economic collapse, and I think that I like that idea of a barter system, but I would also tell you, if you look at the historic examples of hyperinflation, Zimbabwe, of course, leaps to mind, but there are, of course, many, many others. And what tends to happen in hyperinflation is they start writing laws as fast as they can write them, right, Rob?
Absolutely.
And one of the things that they're going to do is say, if you use any other currency other than our own, you're going to get 6 months in jail or whatever fine, because they want to put people back on the currency. Once that Tinkerbell effect that we talked about is lost, and people no longer believe in fiat money, that it doesn't have the value that the state or the government or the body says it has, then they start looking for other forms of currency, right? And when they find you using those forms of currency, there's going to be a harsh penalty. And there's an interesting book, I think I mentioned it on the economic collapse show, Rob, that we did, and it's entitled The Last Resort, and it's just supposed to be a memoir about a guy going back to Zimbabwe where his mom and dad still live. And these are people of European descent that happen to live in Zimbabwe. And he talks about how his mom and dad are, just to survive and keep their little business going, they're doing all this black market stuff and facing severe penalties, and just to get a little bit of gas to run a generator because the local power plant no longer operates. It's a pretty interesting book for those that are interested in that kind of thing. Is there any way, Rob, in your crystal ball, that something like that could happen here?
Yeah, I think it could happen. I mean, in the 1920s, it happened in Weimar, Germany. Mm-hmm. Germany was at that time, probably the most sophisticated and advanced nation in the world. They were a leader in science and industry and medicine. And because they had bad politics, they engaged in bad policy. They printed money, quantitative easing. And it's entirely possible that we could face that here if we let things get out of control. And so far, we've managed to keep it within, well, I wouldn't say normal, but within reasonable bounds. But if we keep engaging in quantitative easing, and we've gotten to a scary point. I read an article last week that one of the reasons that the Fed is encouraging more deficit spending by the federal government is because they need the government to issue more debt so they can buy that debt, because they've essentially bought all the debt that's available, federal government debt that's available in the open market. And they need more of it out there to engage in more stimulus.
Yeah, and my concern is what happens one day when we go to sell, bonds or whatever on
And
the
people
global,
want to buy them.
and nobody shows up to buy them. That's going to be the beginning of the end, in I fear. And we've had some close calls in my lifetime. I mean, I was born in the late '60s, and of course, we had the stagflation in the '70s, and we can talk about that if you want. And we've had recessions, but we just had this big bullet. We somehow didn't suffer that badly from the 2008-2009 financial crisis. But my concern, and maybe you can talk about this, when the Fed bought all those toxic assets, I want to say maybe $6 trillion worth, of maybe give or take $1 trillion. For those of you who listen, that's 1,000 billion, folks. I mean, that's a lot of money. That's a lot of money. But they bought these toxic assets on their books, are probably never going on. Their rate on top of that. And I mean, my God, can you do quantitative easing, printing money to infinity, Rob? Does that work?
I don't think it does. There is an academic movement called modern monetary theory, which essentially believes that you can print as much as you need as long as you're borrowing money in your own currency. So if you're a smaller country, you might have to issue your debt payable in dollars. Mm-hmm. And that can get very dicey very quickly. Their theory is that, well, we control the number of dollars. And if inflation starts to get out of control, we can stop it just by, stopping the printing of money, the quantitative easing. But then what happens to the economy? After all, you're printing the money because you think you need to stimulate the economy. If all of a sudden you stop doing that, and it's these rapid changes that are really dangerous, because people get scared, they hit the brakes. I can borrow money at 5%. I can put up a new factory if I'm a company. I just go into the bond market, I borrow the money, I build a new factory. If I've got these plans laid out and I go to borrow that money and all of a sudden it's at 15% because the Fed decides, hey, we're getting out of control, you're not building that factory. And that's essentially what happened in the very early 80s, 81, 82. Paul Volcker broke the back of inflation by rapidly raising interest rates. I think the T-bond rates hit 15% at one point. I mean, just devastating. If you go to borrow money to buy a house, mm-hmm. You can't buy a house at 15% interest. I mean, you'll never pay that off.
No.
Unfortunately, if you were to do that, a few years later, you could refinance down to something reasonable. So if you were desperate and had to get this new house built or had to build a new factory, you could borrow it and then repay that loan at an early and borrow the money again at a lower interest rates. But getting back to the fear of hyperinflation, I actually have a friend who was born and raised in Bulgaria. His father was actually an international arms dealer. It's a very interesting story. So he spent a lot of time overseas. If his father was working on a contract he worked for the government of Bulgaria as an arms dealer. And, the Eastern Bloc used to provide weapons to a lot of their allies around the world. And he was one of the people who did that. But anyway, after the Berlin Wall fell, the economies in Eastern Europe went through a major crisis, which most of us don't realize because, they weren't very open societies yet at that point. They were still transitioning from communist dictatorship to something more akin to a democratic society. But they had massive hyperinflation. And it got to the point where they stopped using their own currencies and started using Deutschmarks for the most part, because Germany was, it was before the euro, and Germany was still, the dominant economy in continental Europe, certainly. And so the Deutschmark became the currency du jour. People go to throw, because if you get, $1,000 today, this morning, you're going to want to run to the store and buy it, because tonight it's going to be worth 500.
A lot of people don't understand that. And again,
well, it's hard to wrap your mind around.
It is.
You go to Walmart, a gallon of milk is going to be $4. It's going to be $4 tomorrow. It's going to be $4 next week. Maybe next year it'll be $4.25. But there's not this fear of, I have to go out and spend this right this minute, because if I don't, and so you get everybody standing in line. And if they're standing in line spending money before it goes out of value, well, who's doing their job?
Exactly.
Who's producing the goods? And that just contributes, because there's two sides to inflation. There's the supply of money and the supply of goods. So if you get too much money chasing too few goods, you get inflation. And if you get a lot of that, it rolls up into hyperinflation. And that's the thing that worried me about the lockdowns that we went through this year. All of a sudden you're telling people, stay at home, don't go to work. Well, that's fine if you're like me. I stay at home and I work. I get on a computer and I move money back and forth here and there. That's easy to do from home. If I'm building widgets in a factory and they say, oh, we have to shut the factory down because it's just for 15 days, remember, we have to slow the spread. Well, then all of a sudden there's a dent in the supply for the widgets. So when you go to the store to buy the widget, it's not there. Or because there's a shortage of them, now everybody wants it, price goes up. Look at what happened to toilet paper earlier this year. For some reason, people thought, oh, I have to go out and buy, a year's supply of toilet paper today. It drove up the price. The store shelves were emptied. And, now all of a sudden we're going to shut the factory down on top of things like that. That's insane.
Yeah. Yeah. And that idea that you talked about, Rob, with the long lines at an ATM, long lines at the gas station, long lines at the grocery stores are empty.
I remember lines at gasoline stations when I was a kid.
Yeah, me too. I absolutely do. And I didn't understand it then. And it's harder, like you said, it's hard to wrap your brain around now. But I would see, like in Zimbabwe, you'd see these long lines going for miles, and these people would sleep all night in their cars just to fill up whatever they could put in their car, or they would stand in line all night to get it to the ATM, because you got to dump that money. And I could not understand that, but it's making a little bit more sense now. John says, sounds like ammunition. And yeah, that's probably a good place. And if you can get your hands on ammunition, God bless you. You might want to do that. Brett says,
I wanted to do that a year ago when it was cheap and readily available.
Yeah, you're me and Mike Seeklander, my business partner, we're like, yeah, when it goes down again, we're going to buy a couple of pallets full. Brett says, odd and even gas days, not fun. Yeah. Brett remembers. Thank you to the 30 folks that are joining us. Got several more questions still coming for Rob Davies. Rob, of course, is a futures trader. Thank you to the 30 folks that are joining us. Please hit that share button. I'm going to give you just a second to hit the share button while I queue up the next question. And the next question, man, is let's talk about the stock market. What is going on in the stock market, Rob?
Well, it's generally been going up a lot for the past 6 months now. Part of that is stimulus. We've had massive government spending. We've had low interest rates for years now, and they started cutting them once this pandemic started. They had started raising them slowly. As soon as Trump was elected, they started raising interest rates, not in a punitive way or not to high levels, but in an attempt to bring us back into some kind of normality, so that if you put your money in a bank, you can get a little bit of income out of it. CD rates got up a little over 2% for a while. Now, they're back, under 0.5%. So, and that hurts a certain segment of the economy. If you're a retired person living on a fixed income, maybe you worked and saved your whole life and you've got, $50,000, $100,000 saved, which for some people is a lot of money. The average person doesn't have even $1,000 saved in this country, which is truly frightening. Yeah. Because that means if they get a major car repair, they can't pay for it. So they have to either get a payday loan or put it on their credit card and pay 20% interest, which is terrible.
Yeah, that was something that I'm very aware of that. I have friends like that, and I love them to death.
Right.
And they're just like, well, this is just what America, we have debt. Everybody has debt. I'm like, well, not really. I mean, I'm very fortunate that the farm we live on, we have zero debt. We don't have a mortgage. We don't have anything. But it's because we made some choices that were tough at the time. I drove a piece of crap car for a long time. People made fun of my 94 Honda Accord with no air conditioning, no radio, no nothing. But we had a plan and we stuck aggressively to our plan.
Work the plan, right?
That's right. Work the plan.
Plan.
So I want to talk about, you brought up a couple of really good things, and I'm trying to remember when I did a lot of the study for the other show we did on economics. If the Fed is loaning money to the big banks at 0% interest, the hope is that those banks will loan it out to smaller banks to give, like you said, to loan money to companies to build factories.
Mm-hmm.
But if we're on a lockdown and the companies don't need the money to build a factory because they can't, let's say, those smaller banks need to do something with that money. So I think one of the economists that I followed, one of his fears was that they would go into the stock market to invest that money, and that we could see an artificial rise in the stock market that wouldn't actually be reflective of what was truly going on in the economy. So if you could talk to maybe that a little bit, Rob, and
Sure.
how the stock market and the economy aren't necessarily correlated.
For sure. Like I said, we've seen a massive increase in the stock market. Dow's hit over 30,000 recently, which is it's only 30 companies, but they tend to be big and important companies overall, and over time they are the biggest, most important companies if the index is managed correctly. And I think what we've seen during this lockdown is a transfer of wealth from the mom and pop shops, the local businesses, to the bigger companies. The bigger companies have had a lot less in the way of restrictions. So you buy your stuff at Amazon. You sit at home and watch Netflix. You sit on Facebook and see what all your friends are doing. This has, caused those companies. So, I mean, in that respect, that's real. These companies are doing well. They have more subscribers. They're shipping more stuff to more people. They're making more money. So in that sense, that part of the economy is doing great. If you're providing online services, you're having a great economy. If you're the corner grocer, maybe not so much. If your plan is shut down, because it's on lockdown for 200, what is it, day 264 of the 15 days? Yeah. Your economy is doing terrible.
Yeah. Yeah, that's for American Warrior Society and the American Warrior Show, it's an online business, so we've been fine. However, some of the training that we've done, the in-person training, has been a challenge this year with everything that's going on. Some states are more friendly to it than others. Let's get to the next question. And if you have a question for Rob, we've still got a little bit of time here with him before he's got to get on to his day. But if you have a question, please throw it in there. I guess why are we seeing, and maybe you talked to it a little bit, if you could clear up some of the confusion, why is the stock market hitting those all-time highs? What is going on?
Well, it's a combination. Well, I mentioned the stimulus. Mm-hmm. All that money has to flow somewhere. And like you said, if people can't buy a factory, they buy stocks. That's an opportunity. And, we look at the stock market, we say, wow, it keeps going up. So people keep putting money into it, and that kind of feeds on itself. The other thing is some of these companies are doing really well and they deserve to be higher. Mm-hmm. And part of it is that the companies, like you said, banks generally can't go out and buy stocks, but they can lend money to a big corporation, and that corporation can then go out and buy its own stock. So we've seen a lot of stock buybacks as well.
Yeah.
And that drives, less supply, higher price.
And that was one of the things I saw. Some of the economists were like, don't pity the airlines. They had opportunities to do things, and they did stock buybacks to enrich themselves. And then when they hit the hard times, they want to bail out. So, and that's, anyway, I'll leave that where it is. How is the economy doing overall, Rob? What do you think?
Uh, well, it depends on you. If you're doing well, your economy is great. If you're not doing well, if you're locked down and you can't work, you work for a restaurant as a waitress or a waiter, your economy is terrible.
Yeah.
Overall, I think the economy is doing much better than you might otherwise expect. I think to a large degree, people are ignoring the lockdown in parts of the country.
Mm-hmm.
They're saying, look, I'm not buying this anymore. I can't afford to close my business because some people are getting very sick while most people either get it and don't. I mean, how serious is the disease if you can get it and not know you have it?
Right.
And there are a lot of people who experience either no symptoms or mild symptoms, and they're just saying, look, I'm working. I've got to work. My job is essential to me because that's how I pay for my food. I put the roof over my head. I put the gas in my car. So I think the idea that there are some jobs that are non-essential is terrible. That's the sort of thing that a government bureaucrat who's going to get paid whether he sits at home or goes to the office and does nothing either place. He can come up with that idea that your job is non-essential. Well, it's essential to me.
Yeah, it's essential to me. And
But,
go ahead, Rob.
I was going to say, I think in some ways we're fortunate because we have had a technology revolution, and a lot of people can do their jobs that they would go to a normal office and do. They can do them remotely. They can, if they have to have a little meeting, they can do what we're doing. We can get on a camera, sit at our computer, and we can talk face to face to our colleagues and our customers if we need to. We all have computers. We all have internet. We basically virtualize how we work. And I suspect that this is going to make a lot of changes going forward. A lot of people are not going to want to go back to their office. They're not going to want to sit in traffic for 45 minutes to an hour a day if they don't really need to. Now, there may be times where you want to get together. If you're training a colleague, it might be a lot easier to sit, next to them and show them this is how I do this and, work on it that way. But if you don't have to do that, why do you want to? So I think this is bad for certain places. I think it's, we've seen an exodus of people from New York. You see the streets of New York. You can drive on the streets of New York now. They're empty in a lot of cases. Why would you want to live in New York City with the crime, the protesters, the terrible government that they have there now? Why would you live there if you don't have to? And so I think we're going to see a revolution there of less value being placed on your location and more value placed on living where you want and still doing your job. And I think that's long term. I think that's good for people. It's a lot more efficient. I get up, I walk 20 feet, I sit down at my computer, and I'm at work. It's a lot better than getting a car, driving 45 minutes, fighting traffic, burning gasoline while not even moving, wear and tear on the car, stress for me. I get to work, I'm already tired. Now here, I wake up, sit down at my desk, and I'm at work. That's a lot more efficient.
Yeah, you make a compelling case, but as you're watching this show right now, and it looks like I'm looking lovingly into your eyes, I'm actually looking at a camera, and I have a big ring light shining into my face in the studio. And for a person who's an extrovert, this is uncomfortable for me, right? I'm a social person. I like to be around people. I don't like stay-at-home orders. These are not good. And I think we've seen the rates of depression rise in states that have had really significant lockdowns. As a matter of fact, Rob, I was having a conversation the other day with a good friend in another state, and I said, "Hey, man, I've got a lunch meeting to go to. So I can see through the window that their folks are in there waiting on me." He's like, "Your restaurants are open?" I'm like, "Yeah." And I said, "Some restaurants, they have every other booth space is closed off. Some restaurants, it's open and nobody's wearing a mask as if nothing's going on." So, and I don't. And he's like, "Oh my God, I haven't been to a restaurant in months and months and months." So it's pretty amazing. And that's another thing. When the American Warrior show, the first show we did on COVID-19 was in early February, I believe. I'd have to go back and look. And we were really ringing the alarm bell because we had very limited data set.
And it was scary data.
And all we can do is go off the data we had. And one of the things I remember saying is, as we move through this, we're going to have access to better, more reliable, more accurate data, and we'll be able to make better, more reasonable predictions. But right now, we have to look at what we got. At this point, I would submit, Rob, and neither you or I are virologists, but we're pretty smart dudes, that we've got better data over the past 14 months of this pandemic, and we can make more reasonable, accurate decisions. And we have a virus that is incredibly lethal to the elderly. I want to say we're looking at 1.2 to 1.4 mortality rate, and a mean age for the folks that have died from it is 80. So we can use that and make better ideas. Does every 30-year-old need to be locked in their house and not go to the factory and not build the things that we really need to keep the economy moving? I don't know. I don't think so.
I don't think so.
No. Let's look at some of the questions that are coming in. Gerald says pharma, and maybe he's talking about, is pharma a good investment? What do you think?
There's a lot of different variations on pharma. You have, the big drug companies. They tend to have pretty good earnings consistently year after year, but that's dependent on them doing a lot of research and spending a lot of money, and they get a lot of dry holes. But because they're big and because they have large portfolios of products, again, we're talking diversity there. And diversity, to me, is a great thing. So that can be a good investment. If you look at the smaller niche biotech companies, a lot of them are one-hit wonders. And you can pour a lot of money into a treatment for cancer, say, and it not work. Well, that money's already spent. And so they would either have to go out and issue more stock, which dilutes the value of the stock you already have, or they go bankrupt. And that happens quite a lot. So you have to be careful. And again, if you want even further diversity, there are, ETFs and indexes that you can invest in that have a broad spectrum of pharmaceutical companies.
Yeah. Gerald says, how does the average person invest? If you are in mutual funds based on a year like 2025, would you stay in that?
Yeah, you probably should. If you're uncomfortable, first of all, if you had $100,000 sitting around today and you wanted to invest it, I would say, don't put it all in the stock market. Certainly not at once. The odds are, if you put it all today, Lady Luck is going to kill you. It's like betting on black. Maybe you win, maybe you lose, but it's not a great investment. If over time you wanted to filter that money in, say 10% of it a month into a good investment, like I said, broad-based, diversified investments, indexes, and don't be afraid to diversify outside the United States. If you wanted to do a little bit of emerging markets or other developed nations, that's not necessarily a bad idea. A lot of those countries have much cheaper stocks right now. They've been hit harder in many cases than we have, especially to the extent that they're more a physically oriented product rather than a digitally oriented product. But the stock market over the long run is a great investment. You just have to be careful how you do it. Diversify, do it over time, and Albert Einstein said the most powerful thing in the universe is compound interest. Mm-hmm. And, let that be your friend.
Yeah, I agree with that 100%. Jeff Day says, when you depend on a job to feed your family, all jobs are essential.
Absolutely.
Yeah, well said. And that's one of the disturbing things to me is that, and these small business owners that are getting taken away in handcuffs while the Costco right down the road is open for business. You want to go to the Costco
in the streets are not getting arrested.
Yeah, I don't understand that. I don't like that because this is a publicly traded company. We need it, but Rich Brown's hot dog stand.
That's got to shut down.
Yeah, that's got to go. My beautiful sister-in-law is on this morning. Good morning, Miss Lydia. Didn't realize you were on Coffee with Rich. Thank you for joining us. Lydia says, how serious is this disease? If you don't know, you have it. Never thought of it that way. Genius. Yeah, great point, Rob. And my daughter had it, and she was completely asymptomatic. And only because her company had to test everybody did she discover that. Jason says, and because of everyone doing the mass exodus from the big cities, the crime is now expanding like coyotes adapting to the environment. Well said, Jason. The FOP put out a list of the increase in murders in a lot of these cities that have adopted to the defund the police movement, and it is staggering. I don't know if you saw it, Rob, but it was some cities. I think the increase in murders so far this year was like 75% increase.
It's unbelievable. This is back to the bad old days of the 90s, of the 70s and early 80s, before we broke the back of crime.
Yeah. And people don't remember that. A great book to just immerse yourself in that one chapter is Freakonomics. The two economists that wrote that book had an excellent chapter on how we broke the back of crime, to use your words, Rob, because those of us that remember the 70s, New York City, the movies coming out about New York City, you had Serpico, The French Connection. You had Escape from New York, Warriors. I mean, people thought that New York,
my favorite movies.
Oh yeah, some of my absolute favorite movies. But that was where New York was headed until Rudy Giuliani got in there and they cleaned that place up. Let's see. Robert Gayhart says our governor of Kentucky desperately aspires to be Gavin Newsom. I know. I've heard horror stories about what's going on in Kentucky, which is just unbelievable, just north of our border. Let's see here. If someone wants our goods and services, it is essential. Will Parker says that, and Will, of course, is up in Montana, runs an amazing gun store and training facility, and is an amazing trainer. Will, thanks for being on this morning.
But see, to believe that, you have to have a different mindset. You have to believe that each individual has agency in their own life, that if I need something, I need it. And I don't care what some government bureaucrat is telling me I need. They don't know my circumstances. They don't know my situation. They, to put it in more of a Hayekian term, they should not be allowed to plan for me. I should plan for myself.
That's exactly right. And the only thing I would push back a little bit on that, or play devil's advocate, if you will, Rob, is because most Americans don't walk around with, like you said, more than a couple $100 in their bank account at any given time. It's not like here on our farm. I've got 3 generators. I've got deep freezers full of food. I'm staring in my thing of row upon row upon row of gear and equipment. I mean, we're as prepared as we can be, and I have a lot of money in the bank. Okay, we're prepared. Right. Most Americans aren't that way. So, it's hard to say, give me agency, bro. You don't have $20 in the bank. What are you talking about?
There is that. And I think, one of the things that we need to greatly improve in this country is financial education.
Mm-hmm. Exactly.
People don't understand when they're, 18 years old, they get a credit card, they borrow all this money. And, that's essentially what a student loan is. It's a credit card with a very high limit that you spend over the course of 4 or 6 or 8 or 12 years, and you walk away. Well, now you've got to pay that. And I don't think a lot of people have been taught by our educational system, the value of money, how you spend money, how you earn money. A lot of, when I was a kid, people got jobs. When a teenager, you get a job. I had a paper route for 4 years, got up every morning at the crack of dawn, delivered newspapers. I had friends who, a lot of the girls I knew, they worked as waitresses and, shops keeper, little shops and things like that. Today, teenagers are much less likely to have a job, especially if they're a minority. And, for a lot of people, that first job when you're a teenager is your first step on the ladder.
That's right.
And so now you don't have that first step on the ladder because people don't want to hire you. The job isn't there. There's all kinds of regulation and restrictions on, well, you've got to be this old and you have to have this permission slip. And, these are the hours that you need. I was up at 4 a.m. walking the streets of Philadelphia, delivering newspapers.
Yeah. Yeah, it's funny, my dad, I guess he's 77, and he said, what amazes me? And I said, what's that? He said that when I was a teenager, all these stores, all the restaurants, all the grocery stores, it was all run by teenagers. Teenagers worked there. He goes, now I go into these places and it's all old people my age. And I said, I never really considered that. But yeah, he's right. Even in my generation, when I had my first job in the early 80s, I worked at McDonald's and it was all a bunch of teenagers. But now go there and look who's working there. It's a lot of middle-aged women, it seems to be. And I think that's just not a good indicator.
Yeah, you're right. And there are reasons for that. We talked about interest rates being very low a little while ago. Well, if you're a senior and you saved your whole life, but you don't take risky investments, you don't have the income that you expected to have from your savings.
Mm-hmm.
So how do you supplement that? You go to work.
Yeah.
And my guess is that if you're an older person, you're probably a better worker than some kid who's got his first job, because you have experience and you know how to deal with the public. You know all these little things that you learn in a lifetime that a teenager is just starting out to learn.
Mm-hmm.
And so, like my mother, she still gets up and goes to work every day. She works at a local school.
Mm-hmm.
And she's in her mid-70s, and she doesn't need to. And I think for a lot of older people, they don't. Some of them might not need the income, but they need the social interaction, and for them, that's a way to do it.
Yeah, that's true. It's a sense of purpose and a lot of other things that can be meaningful in someone's life. Gerald says, people spend their lives building wealth, leave to someone, and a lot of them are broke in a few years. People are getting free rent in Oregon, yet there are jobs open. Yeah. Bruce says, good morning. I'm a lot late. I'll have to watch this later when I can have a great day. Sorry that I can't watch this live. Hey, Bruce, thanks for popping in. A few more minutes with Rob. I want to get to the last question here, Rob, and then we'll see if there's any questions left. What's 2021 going to bring us? Look into your crystal ball. What do you see?
Well, I think we're going to see continued stimulus from the Fed, continued low interest rates. So if you're looking to borrow, if you have a mortgage, consider refinancing. If you can get a significantly lower rate. Rates are now under 3% for a 30-year mortgage in many cases, depending on your location and your credit score and all that. But you can refinance and get a better rate. I'm chairman of our local municipal authority. We've just refinanced our debt, and we get really good rates. We're paying, under 1.5%, I think, right now on some of our debt. And so, we were able to install a new sewer system in an area that didn't have service. So I would say, if you've got debt, look to refinance it. If you have credit card debt, try to find cards with lower interest rates. The stock market, it's at all-time highs. It could be going higher. But I wouldn't want to put a big bet all at once into the stock market at any time, whether it's low or high, because it can always go a lot lower than you think it will, and it can always go a lot higher than you think it will. So we could see that happening. With the Biden administration, I think we're going to see higher taxes. I think we're going to see a lot more regulation. So I think those were both really bad for the economy. So I'd be careful. And again, it depends on your circumstances. If you're Amazon, the Biden administration might be good. On the other hand, some locations are now looking at taxing you for your each package that you get from Amazon. First, you shut down all the businesses, so everybody has to order online. Then you start taxing online shopping again. So there's a lot to be concerned about in 2021. Not necessarily a time to be making major investments, not a time to be making big commitments to the future. I'd say be defensive, be careful, and watch your six.
Be defensive and be careful. Watch your six. I like that. I think that's probably a really good strategy. Rick wants to know, what about Bitcoin, cryptocurrency? What do you think?
I'm not really that involved with electronic currencies. I have to say, I don't see a whole lot of there. I know people have made a fortune on it, and we saw a crash in it earlier this year. There's a good chance as more companies want to get into that. I know PayPal just did something where you can now buy cryptocurrency online through PayPal or some kind of thing, I'd be very careful with that. I wouldn't put huge amounts of my money. If I wanted to take a risky flyer, I'd say you could buy some, but I wouldn't do it with money that I needed in the next 5 years. A 5-year horizon is a pretty good way to look at an investment like that. Maybe it'll be, and if I got in at 1,000 on Bitcoin and I could get out at 10,000, make 10 times your money, take some of it off the table.
Yeah. Gerald asked a pretty broad question. I know we've just got a few minutes left. Rob, are we okay on time?
We're okay.
Okay. Gerald says, will Biden bring down the economy? And I know that's a loaded question. It's also a fuzzy one. What are your thoughts on something as simple as that?
I don't think he's going to be good for the economy. If they can pass tax increases, and a lot of that's going to depend on the Senate, who controls it. But you can't always, rely on a Republican Senate to hold the line. At a certain point, they're going to have to pass certain legislation. There's a budget that's going to have to be passed, and so they might have to pass tax increases just to keep things like that are essential, like the Pentagon, funded. And a tax increase will be bad for the economy. It'll be bad for everybody because it won't be just people with more than $400,000 in income. I can guarantee that. And the regulatory state, I think the reduction in regulation over the last few years has been a stealth stimulus that was really good for the economy. The amount of regulation in this country is ridiculous. And we've seen a lot of that get cut back during this pandemic. So if you were a doctor in one state, a lot of states said, hey, if you're a doctor, you can come practice in our state based on the license in your home state. And I think that sort of thing is really good. And we have seen a movement at the local level to reduce the amount of licensing and training requirements for like hair braiders. Why should they have to go through hundreds of hours of training to braid hair? It's ridiculous.
Right.
And so that puts a damper on a lot of small businesses, that kind of regulation. And, again, if you're Walmart or Costco or Amazon, you're better equipped to deal with a high regulatory environment than a small company that, doesn't have the money to afford the lawyers that they need to figure out what the regulations even are.
Yeah. That's a great point. That's a real good point. Let's see here. One of the things that Matt says, too many kids today are just handed everything. My kids know that if they want something above and beyond what mom and dad provide, they must earn the money to purchase themselves. My daughter makes homemade jar earrings at 14, earning $400 to $600 a month, and still wants a part-time job. Yeah, I think that's a great one. I think every parent has a role to play in that. Matt, Rob, what do you think?
Oh, absolutely. The schools are not teaching your kids about money. So if you're not teaching them, they don't learn. And those kids are going to grow up with massive amounts of debts. And someday they're going to be calling into Dave Ramsey and saying, I've got all this debt. What do I do? And you don't want that. And he's going to tell them to do what you did. Sell get rid of that brand new car you're tooling around in and buy a 15-year-old Honda or Toyota and, drive it till the wheels fall off.
Yeah. Yeah, that's exactly right. My son, he came to me and he said, Dad, I want a laptop or I want a PlayStation. It was 10 years ago, at least. And I said, okay, let's do this. I'm going to help you start a company and I'll be your first employee and I'll work for free. And we're going to make some flyers. We're going to pass them out in the neighborhood. And that's exactly what we did. And the calls started coming in. I put him together an operational calendar, started taught him how to manage clients. And next thing you know, he bought a PlayStation 3. He bought a laptop, and he was, flush with cash and lots of happy clients. But I could have just said, all right, let's go to Best Buy and I'll buy you whatever you want. Instead, it required an investment on me because I'm out there sweating on the weekend, helping him cut other people's grass. But again, I think that to your point, Rob, it's
you were teaching him a lesson.
Yeah, and now he knows, and again, knowledge is power. Gilly says, good morning, Rich. Good morning, Rob. Good morning, everybody else. Gerald says, adults have taken all the kids' jobs, as mentioned before. Hard for kids to learn how to manage money. Yeah. Rob, what final thoughts do you have for us regarding the economy in the coming year?
Well, I would just say, if you've got a good job and you're working, be happy about that. You know, be thankful for what you have. If you're having a hard time, you know, my heart goes out to you. I mean, this pandemic has been good for me. I'm a kind of an introvert, so I'm sitting at home, not commuting. I'm doing great. I love it. I know a lot of people, it's hurting, especially younger people who are not getting the kind of social interaction. And, you know, teen suicide is way up, and that's a tragedy. So if you're doing well, you know, try to reach out and help those who are not doing well. You know, your friends and family, you know, talk to them, see how they're doing, see if there's something you can do to help them. Be defensive with your investments. Be careful about jumping into things you might not know about. You know, Bitcoin's kind of a complicated thing, so be careful about that. Be careful with gold and silver. You know, you're paying a high premium right now. Go into that slowly if you make that choice. If you've had really good gains in the stock market, you know, consider taking some of it off the table.
I like your point that, you know, the thing about depression and suicide really troubles me. This year alone, on this tiny little road I live on in the middle of nowhere, 2 men my age committed suicide. Had 2 of my neighbors, committed suicide because of some economic factors in their life. And I think that as these small, rural, forgotten towns, when you lose a couple of local plant or something like that, it's like, well, it's a nothing burger. Well, it's everything for that person that was barely making their ends meet.
Sure.
And so I would just, to add on to what you said, Rob, you know, reach out to your friends and family, do a little buddy check, make sure they're okay. It's a holiday season. It can be depressing for a lot of folks, especially given the situation we're in. So I just can't say that enough. There's an opportunity there to build and grow lasting friendships if we utilize it. Would you agree?
Absolutely.
Yeah. Rob, thank you for being on the show this morning. Thank you to everyone that joined us on Coffee with Rich. Rob, is there any way that folks could reach out to you, or is there anywhere that you're out there online?
Yeah, I have an email address that they can reach me at. It's talkeconrob@gmail.com.
All right. And I'll go back in and edit the show notes.
I'll try to answer them.
Yeah. Rob, thank you for being a guest on the show, man. And we probably need to do this again here in a couple of months. What do you think?
I'm available at your leisure.
Thank you, sir. And thank you to everybody. Yeah. And remember, folks, the fight is coming.
Be ready.
That's right. Be ready.